we have put together today in the next 30 minutes, I will invite up on stage 4 panelists, and they're all stakeholders in the impact investing space. We'll talk a little about their roles, the challenges they face, but most importantly, at the end, we want to talk about what does it take to drive this space forward, because that's why we're all here today. So, looking at the time, we only have 30 minutes. I hear we have a break after, so maybe we can do a little longer. But let's invite the first one. I just look here in the corner. Katrin, please come up on stage. Katrin is our bank representative today, and Katrin will show us that banks not only care about money, but also about our future. That's good. The next one, Angela. Angela, please come up on stage. Angela is our consultant, and she, is oftentimes needed in the wild world of ESG and sustainability. Next up, Espen. Espen is our investor up on stage today, and he will show us that ROI can stand both for return on investment and return on impact. And last but not least, Marcus. Marcus has a double role kind of as a stakeholder, both being a beneficiary in a sense and an investor himself. And he will show us that while money is important, it's people who make it matter in the end. So welcome to all of you, and let's get this started. First question we discussed, it doesn't make sense that I introduce you. You will introduce yourselves. And the first question already to you, next to the introduction, would be what has drawn you to the impact space? Katrin, please.
First of all, thank you very much for having us, Stefan.
Sure.
So I'm a philanthropy advisor at UBS. That means I have a double hat. So I work with clients of UBS on strategic philanthropy, but I also work with UBS Optimus Foundation, so the foundation of UBS, where we support projects in education, health, and climate and environment, primarily in the Global South. What attracted me to impact investing, I warned you already, I want to tell a short story.
It's going to be a long story.
You were worried I would start it when I was 5 years old. I'm not going to do that, but I do want to take you for a brief trip to Zambia. If you go there at this time of the year, in the rural areas, you see the people preparing their houses for the rainy season. And they can't afford anything but collecting straw and putting it on the roofs. Of course, that's not very durable. So I had the pleasure to meet a social entrepreneur who would employ waste pickers to collect the plastic which was dumped in nature and transform these into tiles and sell it for a very cheap price to these rural farmers. And of course, that's more durable solution for them. But most important, it's also a very viable and sustainable business model, having a social and economic impact at the same time. And I think it's solutions like that which really work on the ground that inspire me. And I think that's what we need to scale with impact investing.
Very interesting. Angela.
Yes, before coming to PwC and building up a Center of Excellence on Sustainable Finance, I was director of the Forum for Sustainable Investment, which did a lot of also advocacy work for sustainable investments, and was then very positively surprised when the EU Sustainable Finance Action Plan was published in 2018 and all the EU Sustainable Finance Regulation wave started. Now, while there is also some criticism, of course, of the regulation, I think it was very positive that it brought the issue of sustainable finance so much in the forefront of the public debate. And yeah, that is really what brought me also to believe in the power of investors actually in doing good.
Espen. Thanks to PwC for having me. My name is Espen Dahl and I work for a family office. I have not always worked for a family office. I started my career in impact investing back in the mid-90s in the UK. I've been through renewable energy, I've been through life sciences, consulting, and ended up in social impact investing. And to me, that is one of the true underinvested areas of impact. And unless we get a just transition for all, I think we're going to struggle to reach our other impact goals. For me, it really unlocks the potential of the other impact areas. Personally, I got attracted to it because my father started an NGO back 60 years ago, where he delivered medical care to the hardest to reach people in Bangladesh and places like that. So it's always been part of my DNA, and to me, to be able to bring the best of me, my heart and my mind to work at the same time really is super exciting.
Thank you for being here. My name is Markus Witzke from Hoffnungsträger Foundation or Hoffnungsträger Stiftung. I'm the CEO since about 11 years, and what brought me to impact investing was a meeting at that time when I started over there, that we discussed the opportunities of foundations just giving away the typical grant we are having every year, which is a fair sum to many, but also the larger opportunities to take some of our capital, which was whatever at various banks, and use that for investing that into causes or real estate or whatever we will show you later on, and to make an impact as well out of the direct investment. And that really thrilled me to say, okay, can I take a few millions every year, or can I take a much larger amount to really change the world? So that brought me to impact investment. And we have seen after 10 years that it seems that really works.
All right, thank you so much. All right, jumping in, Espen, I want to start with you. So when you go onto the website of FIRD, and even though we have met now and talked about it a lot, I still pronounce it wrong probably, but which I recommend you all do, you will find that FIRD is a family-owned investment company. As you say, some might say it's a family office as a classification. You're super transparent about the things you do. You will see that FIRD does a lot of impact. You have a great vision to create enduring value and leave clear footprints. As a family and family office, you wouldn't have to do any of that. Why are you so transparent, and why that focus on impact?
I think it comes down to the ability to survive through change. FIRD has a 175-year history, 5th and 6th generation owners. I'm not part of the family, for full disclosure, but it means that you have to manage through changing societal contracts. The origin of the money in the FIRD system is tobacco. That was fine 30 years ago, but it isn't now. And being honest about it, we are going to manage through more changes coming. And in order to be positioned for that change, you really have to understand and embrace change. So for us, that is part of it. And the voluntary accountability is also part of it. We have a responsibility to our future generations, not just in the family, but future generations of being good custodians. And for us, it's part of the DNA. We professionalize, we share, and we try to inspire others. And that's probably why I'm here.
All right, yeah. It is, and the second question that goes hand in hand, obviously not everybody, me neither, has hundreds of millions of euros to spend. So what would you recommend for people with a more normal amount of wealth to do in the impact space when they want to get active?
To me, I think it's about finding a problem that you care deeply about, something that really matters to you individually, and then to understand the root causes of that problem, and maybe to find some local ways and some local partners where you can manage and invest in the change. You see something like a different future, a different horizon than what we currently have, and you get involved actively, bring other people in, and try to move towards that change. And it doesn't have to be large scale. That's the beauty of it, especially on the social side. You can pilot and experiment with very little money. It's super well received, and lots of other people will join you on the way.
Mm-hmm. Very beautiful. And local, thinking about more local projects, also here in Germany, obviously thinking of you and what you do at the Hoffnungsträger Stiftung. Don't you have a potential investment opportunity for us?
Yeah, I think we tested over time several ideas. We started with a kindergarten in Berlin, which we did as first impact investment, so kindergarten in a really special area where people with high needs are, and we thought that might be a concept. But my kindergarten is, obviously everybody knows it, but later on we said, okay, what can we do which is more unique? And then it became to the topic of social housing and refugee integration, where we started a concept integrating both, means we call it houses of hope, or in German Hoffnungshaus, as a concept and a building. We will probably see the picture quite on the screen, or not. Now we got it. So that's, you can see that's one of the centers. We actually have 10 of them in Southwest Germany, now going to other states. But the idea was not the house. The first thing was we want to have a social solution. And to make that happen, we started building our own houses with a special concept to say we want affordable housing, we want it in a wooden construction. They should be done fast, and they should be as impact investment, because we want to use our own money to make that happen and pay for the social work, but the real estate investment should bring us the money we have invested over there back. And that really worked out. I mean, that took a while, but then we saw the idea of housing people, and it's a mix in this concept of refugees with Germans living together in the same house with a very unique concept that really made a change because of social society. But on the other hand, it's also an impact investment which other investors are following. So that was the idea. The idea was not coming from the impact investing side. The idea was, what is the social problem we need to solve? And I mean, with our money, we could have built one house and say, that's the lighthouse. Everybody shall come and see it. I love more the idea. I'm not a really fan of lighthouses. They have a very limited radius. So I know 35 kilometers is the maximum radius you can see the light of a lighthouse, which is okay, I mean, but first idea was, let's do it in the state of Baden-Württemberg, and in Baden-Württemberg, 35 kilometers is nothing. So it means we have it now from the Lake of Constance to up in the northern part. We built up these centers now going to Bavaria and Rhineland-Pfalz as the next, and show how this may happen and what is changing in our society. And you know, integration of refugees is a highly political issue. I think I don't need to say anything about that topic. It's nearly every day in the news. But to show how to make a difference, that's what we want to do over here, with impact investment as well.
Great. Angela, moving to you. Obviously, as a consultant, I include myself, we have the benefit of working with many different stakeholders, projects, and so forth. So one could say we have like a bird's eye view on the ecosystem, at least more than others maybe. What would you say from your point of view? What are the key trends that you currently perceive, and maybe also regulatory changes in the space?
Well, I think, first of all, it's important to distinguish between ESG investment and impact investment. The regulatory side has focused more on the ESG investment side. And just to explain a bit the difference again, I think ESG investment has an impact on the companies that investors actually have in their portfolios. So it is kind of indirect impact. The aim is to improve the sustainability performance of the companies the investors are invested in. For example, by excluding certain investments, for example, fossil fuel investments from the portfolio, or also, which has very big impact, engaging with the companies they are invested in with the aim of improving their sustainability performance. And on the other hand, impact investment is more, as we've heard just now, about investing in concrete projects on the ground with the aim of making a societal and environmental impact with that particular project or investment. And with regard to the regulation, or also maybe the overall ecosystem of sustainable investments at the moment, I see two key trends. One is a focus more also on transition finance, because based on the insight that it's not only about redirecting financial flows in already green companies or already green projects, but actually about supporting those companies that are on a transition, that maybe already have a net zero transition plan, but are not there yet. So providing them with finance to achieve that. That's the one trend. And the other trend I see is that there is also some focus on anti-greenwashing. So there is also some work to do with regard to enhanced compliance, governance checks, to preserve kind of the integrity also of sustainable investments. Because there was this huge trend. Everybody wanted to invest sustainably in the last years. And sometimes it was not very transparent what the actual criteria was of that sustainable investment.
Mm. But in the form of anti-greenwashing, I think you're active in that space, right?
Yeah, so
PwC.
I think it's very important for companies to kind of bring their house in order, and that goes beyond the financial product level itself. It's also about, of course, good risk management, also sound compliance and governance processes, but even like marketing is important, that you actually practice what you preach, that when you sell the fund, that you also keep to what the fund actually includes. And then there's also some new regulatory moves with the ESMA guidelines on fund names, that funds have to fulfill certain thresholds of sustainable investments in order to be able to call themselves sustainable. So we've also developed kind of an AI-based tool to check the funds whether they fulfill this criteria.
Mm. Maybe we'll touch on that in the last question. Last but not least, turning to you, Katrin. As said in the beginning, oftentimes financial institutions are perceived to be obviously maximizing or focused, being on maximizing returns. How has UBS first as a bank adapted to maybe the change in sentiment amongst clients and people? And what specifically is the role of the UBS Optimus Foundation that you represent?
Mm-hmm. So as a bank and wealth manager, we are in close conversation with our clients, and indeed we see huge demand for impact. 90% of our clients are really serious about philanthropy and impact. And Angela, you already described or differentiated between ESG and impact investing. What I want to do is I want to open up some shades of impact investing. What I would say is there's investing with impact. So this is more traditional investments where you would require market-based return alongside an impact. And on the other side, investing for impact. So where it's really impact first, and as an investor, you would be fine also with a below market rate return. And that's exactly what we do with UBS Optimus Foundation, that we take this impact first approach when we do also traditional grants, but also direct investments in social enterprises, and also when we offer blended finance funds. And I think that's also the sweet spot of being a foundation inside a bank. Is that we can set up such solutions, such blended finance funds. For example, we're closing end of this year the SDG Outcomes Fund, which we have developed together with asset management colleagues. So we have a philanthropic tranche and investment tranche that we bring here together to support SDG-aligned projects.
Mm-hmm. Interesting. We just talked before the session also to give you a couple of, or one number on the UBS Optimus Foundation. So it just makes it easier also for UBS clients to invest into philanthropy and impact. And last year you collected 350 million euros from UBS clients, right?
Well, that's then combined clients plus what we do as Optimus Foundation is that we kind of top up or match the grants of the clients. That's kind of 10% that's usually given by UBS, topping up the 100% of the clients.
But I still find it inspiring to see, all right, how much, obviously, as a collective, how much can be done, because it's a big amount, right? When you mentioned, going back to the outcomes fund that you mentioned, can you elaborate a little more on the topic of outcomes-based financing? What do you mean?
Yeah, so this fund is specifically called SDG Outcomes Fund. And what we mean here is that the financial return is entirely based on the social impact. So that works that we have predefined outcomes, which are then measured and verified by like external evaluators. Then we see how much impact was actually achieved. So in addition to an investor, we have an outcomes payer who comes in and then pays kind of a top up based on how much impact was essentially generated. In the case of the SDG Outcomes Fund, it's a 100 million fund. So we have 15 outcomes contracts which are supported with that fund. And that, I think it's a very important approach because what we're trying to do here is really try and build more a market and support the impact economy by trying to also put a price tag on impact, which is of course is very challenging. But I think it's really an approach to have also a more market-based approach to philanthropy.
Good. Going back to you two, Espen and Marcus, as we now heard and as you obviously all know, impact investing is about being intentional, right? About having something to measure in the end. Can you maybe share one or two examples of actual KPIs or things you measure in your respective portfolios or what you do?
Espen, would you start?
Yeah, I can start. I think we try to move away from just counting things. Operational KPIs like, I don't know, in my case, how many people got a job? That's really important because it shows something about the scale on which you operate. But it doesn't say anything about the quality of impact. And it's really possible to get a job that's not meaningful, that's actually really unhealthy. You travel 2.5 hours each way and you're miserable at work. So how do you say, is that impactful? Yeah, some people in the room who feel that, yeah. No, it's, how do you measure the impact of that? So I'd like to ask the question of so what? And find ways of saying, okay, what is the change? Do we have a rate of change in people's lives or the outcomes? And it comes back to a methodology called theory of change that basically looks at what you put in and what you can count as output, but then it really looks at the outcomes and linking that to impact. So for us, we do count things, but we always try to relate to it in terms of change, desired change. And then we go back, we do less of what gives the unintended consequences, we do more of what makes the positive change. And that way you kind of optimize for the impact.
Marcus?
I mean, just to follow up, there is always also a theory of change we are having where we do our investments. If you just look on the example, which is here on the screen, means there is a KPI, which is on the construction of the house, the save of carbon dioxide, so we can measure that quite exactly. The reducing of energy, pollution, so all the ecological stuff. And there's also not a huge social impact while we are doing that, means about the families, the integration. So we have soft measurements and hard, which is typically, we measure the employment rate, we measure the quality, how people learn German, but we also measure, do they have relationships outside of this community they are living? Because, I mean, integration means, for example, that people really have relations to people in society beside their own peer group of refugees and others. So we have a mixed up of both, also to motivate people, but also to see where to engage them. And that gives a whole portfolio of things we say, okay, where we go forward. And for us, I mean, that's why having 10 of these centers means also say, okay, if in one we got this level and we get in another one a different one, why does this happen so different? People are always different, but do we need to improve some of our activities in one or the others? And I think that's I mean, it's always what I was looking for, originally working for a non-profit organization, to say, what is the outcome of what we are doing? So if you're not looking for impact, you can typically, as an NGO, run your business forever if you have somebody who is willing to pay for. So if you build that in, you say, okay, there must be something which I want to achieve. Or if anybody else is doing it better, I mean, our question is, should we give our money to somebody else beside to our own activities?
Yeah. All right. As said, the main part, we have 6 minutes remaining. We want to discuss the topic of how can we drive the space forward. So really open up the stage here. I know beforehand we've had a good discussion. What do you see as being barriers of entry for people to actually enter? Maybe especially to Germany also, who knows? What are you recommending maybe that should happen in terms of collaboration, that we see more change? So really feel free to share your thoughts. How can we move the space forward? Maybe from left to right, and then just jump in as you feel free, and maybe we can have some questions at the end.
Yeah. I think there are multiple barriers. I will leave some for you. Maybe just picking out also impact investing is usually it's high risk startups that we're looking at, and it's also high transaction costs. So like we really need to do thorough due diligence, and I think what we really need to scale impact investing is to minimize these transaction costs. So one way I see is to really pool the funding, like in the example I mentioned of this fund, and that then kind of one player takes on the due diligence, etc., but makes it more easy and more accessible for other investors to jump in into impact investing.
So not be egoistical in a sense, do your own thing, but rather
exactly
collaborate, work together. Makes sense to me?
Yeah, I mean, I would fully agree with this blended finance aspect. I think for many of the sustainability investments we need, for example, also I was in a session this morning on nature and biodiversity protection, and there are, for example, protection areas that need to be financed, and this is not bankable. It's not like a clear private investment business case. So you really need kind of also new financing models to finance this type of projects. And there you have to think a bit more creatively also. So blended finance is one option, and there's also other ways of also the government to chip in to provide some guarantees also to reduce the risks. And if we want to bring this to scale, this is really what is needed.
Mm-hmm. I think I just want to jump on the bandwagon on tailored finance. Every asset class, every investment has its own risks. And what we try to do is to understand those risks and maybe give a different type of financing. So equity has certain risks, debt has certain risks. But if you, for example, instead of having a standard loan that's repayable over a certain period of time, you can do revenue-based financing, or you can do clever, creative ways of tailoring it to the needs of the investment. And that combined with blended finance, outcome contracts, it opens up a whole new toolkit. And shockingly, only 4% of impact investors in Europe have the ability to use 4 or more of these things. More than 50% of all impact investors in Europe can only use one tool. I think this is where the family office, the private individuals who really understand and dig deep into this can play a massive role.
Yeah, have a non-regulatory kind of like area where they can be active. Yeah, makes sense.
I mean, it's definitely challenging. Give you one example, just to make it concrete. For this houses, we did one loan project. Means everybody could give us a small loan, not secured loan, only by the building, but not by regulatory. So we received about more than 100 loans for all the project. But in Germany, for example, this is limit from 5,000 to 120,000 per loan each. So it makes it simple for everybody who wants, even people give a small investment into a cause, they can really, it's next to their door, probably. But in Germany, it's limited, for example, to 2.5 million in total, or you need a bank license. Hey, come on, as a social foundation, and I want to go and become a bank or something else. So we have, if it comes to real estate, 2.5 million is not really that much. So we have a lot of regulatory limitations, even to let participate people, you are quite stretched. So that's one case which limits you, even to want to take a lot of other people's joining that effort.